Hello guys, and welcome to my channel. As I promised, we'll be having sessions together, and we'll be learning from each other. So without much further ado, today I was looking at gold, and basically gold has been on a very bearish trend. As you can see from here, gold has been on a very bearish trend. This is a downtrend. As you can see, gold has been on a bearish trend, but even if market is selling, it can't sell forever. The market moves in a wave-like motion. It has to move up, higher lows and lower lows, and lower lows and higher lows, something like that. But it can't like just drop from here like straight. No. So today I'll be showing you how I normally do my analysis. So first of all, I'll go on daily time frame. Because I am an intraday and the scalper. I don't hold for long. I just get into the market 4 hours and I'm done. Oh, when I mean 4 hours, I mean a session. That's majorly London and the New York session, but I prefer trading New York session because it's easy, because you will be knowing, you'll be having an advantage of knowing what happened in the London session. So New York is easier to trade. So first of all, we'd be looking for highs and lows that the market haven't retested yet. So we'll be looking for these highs, and where are the highs and the lows that the market hasn't retested yet. We have this one, we have this low here, market haven't retested here, right? We have this high, sorry, this high, the recent highs and lows. Remember, we're looking at the recent highs and lows that the market hasn't yet retested. So there is that high and this low, and we also have this low. Yeah, it's not yet retested, and we can have this high, this and this. They are relatively equal highs, so we can take from here. So knowing, okay, you know, we are in daily time frame, so this is a big move, this is a big nini. So we can take this one, and from there we will look at the where we can find the clean highs and the clean lows. But first of all, when you're looking at the daily time frame, remember, you must be having maybe 3 to 4 weeks, chart, clear chart that you can see. That's one thing that you should remember. So you'll be having to look from what happened over here, but where we have our main focus it's right here, where the trade where the market price is at the moment. So actually I'm on this trade right now. It is a good trade. I decided like to share with you before it even unfolds, and we'll see what will happen later. So after highlighting the highs and lows that haven't been retested before, the recent highs and lows that haven't been retested, we look for clean highs and clean lows that we think the market might not we think that's where we'll be having stop hunts, like buy stops are there yeah, that's where we'll be having buy stops, or people's traders buy stops. We have a clean high here. Let me highlight it. I hope we are together. I hope you can see it. This is a clean high. That's a clean high, guys. Sorry about that. We have a clean high here that when I have already highlighted that clean high, and that's already like an indication like where we'll expect the market to come in the long run. So you have a clean high there. So from there, what else can we see on this on the chart? Nothing much. So we move to a lower time frame. We can move to 4 hours. We can move to 4 hours. When you move to 4 hour, now you can see how clear the charts become. The low that we were marking, the clean highs that we were marking, the charts become even clearer on the lower time frame. When you have set your zones correctly on the lower time frame, it wouldn't be so noisy as many people say. So what else can we see here? We also have these clean you can say this is relatively equal highs. The market didn't break this high. It traded to near or close to the high, but it didn't sweep the highs. So we can note this also as clean highs that we expect the market to come to. Remember, this is 4 hours. This is 4 hours. So and another thing that we should be looking at is where we should be noting on our chart on daily basis where the market moved with a lot of, okay, we can say with the momentum, or break a structure, or moved recently with a lot of momentum. When I mean that, I say something like this here. We can see here market moved with a lot of speed. It didn't waste time there. I hope it's clear, guys. I hope it's clear. There the market moved with a lot of speed. So we can see here the market moved with speed. When I say speed, I mean momentum in the market. So we are on the 4 hour time frame. We've seen we had clean highs here that the market had to sweep, and this was an indication that we have break a structure here to the upside. So when the market then the market retraced, and now we are here we see a clean highs. So remember, the market didn't break this low. This one didn't break this low. So this tells us that there are still buyers in this market. There are still buyers in this market. So we can go to lower time frame, the 1 hour. We can go to 1 hour, and on 1 hour, even on 4 hours. Sorry, there's something I didn't show you here. Sorry, we can go to 1 hour. We can go to 1 hour. So basically, this is how the 1 hour looks like. Here is where the market moved with momentum, and then we had these clean highs here that we expect the market to raid. So when the market was retracing back, remember here the market broke structure to the upside. So when the market was retracing back, it formed something like this. Here we had a consolidation. We had some consolidation here, and remember, the market will not move unless the market will always start with consolidation. Every move in the market will always start with consolidation. So we had consolidation here. I'm not supposed to teach you this, but let me just show you it. Let me just show you guys. We had consolidation here. Let me highlight it. we had consolidation here, right? After having this consolidation, and remember, you have to look when this consolidation happened here, on your left side, what was there? What was there on your left side? On my left side, we had a liquidity void here. We had a liquidity void that was mitigated. You see, so we had this consolidation. The market did an expansion. Let me highlight this. Sorry about mitigation. I'm talking about mitigation. That's deep. That's deep. That's why I didn't want to confuse you guys. But let me just show you the basic of it. It's simple. I like keeping it simple and keeping it clear. So you can see the zone that I am trading in. I no longer I no longer want to know what happened before this low going this side and this. So this is the range. This is the range that I am currently looking at, from this low to this high. This is my trading range. This is my trading range as per now, because this high didn't break this low. You see, this one didn't break this one. So our trading range is from here to here. So you have to define your range. You have to define your range. So sorry, let me take that off. So we had consolidation here, right? We have consolidation here. After consolidation, the market will always go to an expansion. It never goes from consolidation to retracement or consolidation to reversal. No, the market goes from consolidation to expansion. And in this field, in this industry, patience is a skill that you have to master. You have to master. Patience is very, very important in here. And here we don't chase price. So when the market is in consolidation, you wait. When the market is in consolidation, it actually tells us that the market makers are allowing orders to build either above the market here or below the market here. And where we'll be having more orders, that's where the market maker will direct the market towards. So we wait for this expansion. Sometimes the market might expand so far that it does not do a retracement, but this one it had. So this is one of the best trades that I really like taking. So the market expanded, right? After the market expanded, expansion is majorly coupled up with the order block that the market left behind. We can say behind, we can say that it left near the equilibrium in the consolidation zone, near or at the consolidation zone. So we had this order block here. We had this consolidation near the consolidation. I don't want to go that deep, but let me just show you. In this consolidation area here, we have to look at sometimes we can look at the 50%. We can look at the 50% from here to here. We're looking at the bodies only. So equilibrium of this consolidation is here. This is where we have equilibrium. When I say I highlight EQL, I mean equilibrium. So this is where we have equilibrium of this consolidation. This is where we have the fair price. So in this consolidation, this is the equilibrium here. We'll be looking for order block that is near or at the equilibrium. So let me take this out so that you can see. So the order block that is near or at the equilibrium is this one. Now let me highlight only the order block from the high to the low. That's the only part that we are we are going to look at. This is the only part that we are interested in. When the market gets into this area, we are looking for buys, because we already had this indication that the market wants to go higher. So many people chase the market, they wait until they see the market that it's almost up here, then they want to buy. And then, you know, the market makers return the market, the price, to this order block here that we will be looking forward to take our buys from. So on this order block here, which I normally like to take from here. So when you enter your trade, this is a trade that I took yesterday. From here, your stop loss should be below, or here, below just the 50% of the order block, because once the order block has been retested below the 50%, I think market has already changed the direction there. Sorry for that, excuse me. So you can see, and now you'll be targeting this high that was not taken out. You see, so now this is more than 1:3. It's actually 1:4. You see, and actually we're still in the same trade. This is one of the trade that I took yesterday, and I took another one here today, which I'm yet to show you. So we had the expansion, market retraced back to the order block. This let me call it a retracement. So the market retraced here, right? After it retraced, look at it. It doesn't even spend so much time here. And you can see the wicks, like when you have to learn about even the candlesticks. So you can see the wicks of the candlestick here. This is showing rejection, like the buyers are still here. The buyers are still here. They're pushing the market upward. So even this weak rejection, it's showing us. So we had a retracement. So we had a sure trade that this market was going to shoot to our next level, to our next high. And actually you have to get out of the market above near or above or at the relatively equal highs, because that's when the market tend to kind of reverse or retrace from there. So when we buy from here, we target this high, this one. We target this high. So the market came up there. Remember, when the market came here, let me clear the chart. It's becoming noisy right now. This was just bonus. The one that I just shown you was bonus, because that's the trade I took yesterday, and I got out of it from here. So we have to take, let me clean these highs. So remember, when the market consolidated here, it retraced, and then remember, look at here, it left an order block. This order block, we call it propulsion block. We call this a propulsion block. We call this a propulsion block. So a propulsion block is a candlestick. It may either be a bullish or a bearish order block, that when the market comes back, it has to propel it to the higher side. As we're talking, this is live trade. You can see this is live trade. The market, actually I took another trade from here. I took another trade from here. Immediately when the trade touched that one, and I placed my order blocks, I placed my stop loss just below here, and my target is above this clean highs that is here, that I just already highlighted. And remember, this market that is happening right now, this market that is happening right now, I'm not showing you from a history that someone is you took and maybe um, study it. No, we are doing it live right here and right now. So here will be our take profit, and you can see that this is 1:3. This is 1:3. Many people are complicating forex out here. People complicating forex out here. So this is the just simple basic of it, but we know in the long run, we are waiting for this market to get to this, at least this point, this high that's here on, even break this high. That's what you're waiting for. But for now we're waiting for the market to come to these highs, because we know we have buy stop here, we have buy stops here, we have buy stops here. We have buy stops here, and the market has to take it. The only thing that we need is just to be in sync with the market. We need to be in sync with the market makers, you know. And remember, okay, when the market move, when it breaks here, you can either get out of the market, or you can you can have some partial close, and we can even wait. But this is 1 hour, it may take a while, but we know it's going to take this here. This is 806 this is 863 pips in this. Remember, we're trading gold here, we're trading gold. Actually, I told you I entered this trade. This is a trade that I took, and it's happening right now. It's happening right now. Let's wait and watch. Let's wait and watch. Let's wait and watch. This is just liquidity here. This high is just liquidity. This high is just liquidity. So you'll find people who don't understand order blocks and such. They'll be highlighting these. They will be highlighting this order block and wanting to sell from here, not knowing that above here is liquidity. We have buy stop above here. You know, we have buy stop above here, and the market has to come for it. The market has to come for it. The market has to come for it. Yeah, so I think we'll close it from here, because you can see I wish I was live on YouTube, so that others who are live with me could have taken this trade. But if you've seen this trade late, it's not my fault. So have a great weekend. Have a great week. Have a great week. Have a great trading week. And I think I'll be done for today. I'm done for today. So thank you guys. Thank you for having my time. Thank you for watching my channel. And I'll not only be having sessions. I'll also be looking for prominent forex traders in Kenya and probably in East Africa, if I get the opportunity to, and bring them to the show and educate each other, because I know shining other people's candle does not dim mine. So I'll be bringing prominent forex traders in the industry into the show, so that they can encourage us also, to know their backgrounds, to know how they started trading and what. I'll try to bring prominent traders in the industry and motivate you guys. So yes, so guys, after 2 hours of wait, the price went in our direction, and this was a good trade. And on gold, it's 863 pips, and we are done for the day. I told you guys we're doing live trading. I'm not getting data from history from years ago, months ago, and trying to show you something that's working. No, I'm showing you things from current price as market is moving.